So on the 15 minutes time frame, we come here to see price is barely going above the highs, and it just comes back in, falls back in, and we see that use our Asian indicator. It allows us to see, all right, we can't really trade this because this was during the close of New York section, Asian section. So we are waiting, and we got this is our section to trade. And so what is our goal here? So our goal here is to look for trades that match our setup. And then here we don't see anything here that looks like our trade setup, and price still comes down, clears liquidity, which should have been our drawn liquidity out of this point, but we didn't see any clear entry, right? Because if we even wanted to enter, price didn't just engulf this area, didn't give any fair value gap, so we can enter in this area, and that's it. Drawn liquidity on that area is closed. But you now see price came down here, induced this low that led to this high, and after that we saw a sweep of liquidity, and price started to go back up, and price failed to engulf this high. So this is not our liquidity entry area, so we're waiting to see what will happen. But we see right here, just beside here, we can see an inverted fair value gap. This candle, inverted fair value gap, price ran through, and so now we can use that fair value gap as an ultimatum for price to go to a high. We could either go to this high or this high, obviously, because there's going to be sellers on this high, so the stop loss is ultimately going to be here, and they're going to be using this high as a stop loss, or this as an entry, so we can still take it all the way up here. It's just whatever is but we know our drawn liquidity is this high ultimately, because it just was the one that ran through the fair value gap. So go to a lower time frame, mark it out, and go to a lower time frame. So come here on the 1 minute, we see price coming into this zone, and we're becoming more careful because we want to see the same thing happen again. We now see inverted fair value gap, inverted fair value gap right here, and inside inverted fair value gap we see a run of liquidity to the upside. See that liquidity run, CS price use the fair value gap to run through this high, and now we are interested in this area. This was the odd block that led to this push to the upside, and we can see fair value gap in it, so that makes it a high probability order block. So we place our orders above the order block and below the low of that move, and so price came into it, moved up, chopped around a bit, and ultimately went to take profit, which we could have held longer if we used objective subjective methods, whatever. But it was a good trade, and yeah, ultimately.